Okay. Okay, so we're going to be going over Generation Mining Limited today, and this to me is the cheapest palladium development project in the world. The ticker symbol is GENM, and price is currently about 91 cents. And this is traded on the Toronto Stock Exchange. So who are they? So the company was started in 2018. They optioned a few different projects. They have an Alberta zinc deposit, and they also have a molybdenum deposit that they're exploring. But the main crux is that in 2019 they made a joint venture deal with Sibanye-Stillwater to develop their Marathon PGM deposit. They bought a 51% interest in the project for $3 million cash and $3 million of shares that would go to Sibanye. They would earn an additional 29% interest if they spent $10 million developing the project and completing pre-economic assessment. I think that's something like that. So basically what they had to do is that they had to spend $10 million on the project developing it and complete this PEA within 4 years. And then they get an extra 29%, which would bring their ownership of the project up to 80%. So in February 2020, they completed the PEA. In November of 2020, they earned their 80% interest by they've spent enough money on the project. In March 2021, they completed the feasibility study of the project, so they've really got it moving along quite fast. So the history deposit. So Stillwater purchased the property from Marathon PGM for $118 million back in 2010. Marathon Gold was spun out from the deal. They basically got to keep their gold deposits and just sold off the Marathon deposit. And they got to keep a bunch of the cash. Stillwater later was acquired by Sibanye for $2.2 billion in 2016, kind of like the low of the platinum group metals prices. Then Generation Mining created the JV with Sibanye to get the project moving forward again in 2019. So a bit about the company, like deposit details. So we've got a market cap on the company about $127 million. They've got about $13 million in cash from the last reporting I saw. But I think in one of their presentations they said it's down to about $7 or $8 million right now. So we've got gold, we've got silver, copper, platinum, and palladium. The two big ones is that we've got a fair bit of palladium. We've got 3.2 million ounces, which counts for 62% of the reserve value, and it's about $12 billion at today's prices. Second is copper, and it's about $4.3 billion, and it's 23% of the resource, and then they also have some platinum in there as well, which is 8.4% of the resource. So total deposit worth about $19 billion at today's spot prices, and when you account for their 80% ownership, that's about $15.1 billion. I basically went through and did some what I expected them to make from production. So just kind of assume like, okay, let's say we have our first good year of production, and going off of kind of like just an average number of what they expect to be producing, how much money would they be making? So the big money producer here is the Palladium deposit. So basically I kind of estimate that they're going to be producing about 200,000 ounces a year of it. And this would lead to $730 million in profit from, or revenue from selling the Palladium. Then they'd also get $165 million from the copper, $67 million from the platinum, $32 million from the gold, and just $1.2 million from the silver. This is a big reason I have a hard time buying into silver producers. It's just silver is just not worth very much comparison to these other metals. So total revenue would be just under $1 billion for the year. And then I took their all-in sustaining cost of $809, which seems really low, but I guess it makes sense that it's open pit. And for 245,000 ounces of palladium equivalent, for a cost of about $200 million to mine this. And so they'd be making about $800 million in the first year of production. And we have to remember, this is like a $130 million company. And obviously they don't own it all, but like that's a lot of money, a lot of projected profit. So I kind of looked at return on capital. So the initial capital expenditure that they're estimating is $665 million for basically all the money spent to get the mine up and running. So profits from full year production, just a number from the last slide, about $800 million. And so basically they would pay off like their whole invested capital in under a year of like 0.83 years, which is insane. And they also have a rhodium credit within their platinum deposit. With their deposit, they kind of have three different sections. One's more copper based and one's more palladium based. And so their plan is to mine the palladium deposit first, and just because assuming that like palladium prices will eventually go down, but they want to kind of lock that in as soon as possible. But in there, once when they did the metallurgy, I believe it is, or like they basically kind of looked at how much metal they can pull out of the mining. What they found is that they're finding 2 grams of rhodium per ton, and rhodium's currently trading close to $1,000 per gram. And so this wasn't accounted for in any of their drilling, and it's not accounted for in any of their reserves. But it's like, this is very possible that just this rhodium here basically covers like all the costs of mining, and everything else is just like gravy on top. So there's really no telling how much this could really impact the economics of the project, but it's definitely an amazing part to have. So comparison company, North American Palladium. Basically, this is a company that had 5 million ounces of measured and reserved when they bought it. Impala Platinum bought this company for $1 billion Canadian. This deposit's located relatively close, like they're both in Ontario and same kind of area. But this is an underground operation versus generation mining being an open pit operation. Palladium price was around $1,700 per ounce USD at the time of acquisition. Currently, the palladium price is around $3,000 ounce, so quite a significant increase. And you also have to account for that this is primarily just profit that we're increasing here. When we're making it's kind of like maybe so you've got the $805 cut off, and so maybe you're making let's say $900 profit or something like that. But it's like with this price, well, now the profit that you're making is like $2,200 per ounce. So you increase the profit more than you've actually increased the price of the commodity, which is pretty crazy. But so yeah, this project was bought for $1 billion 2 years ago, back in 2019. And again, it's like it was a 5 million ounce measured and indicated, and this one is currently 3.2. So it's just based on those metrics, this deposit should be at least worth, I don't know, 600 million, something like that. But with the higher prices, it's like you really should double or triple that. So it's like I really think this deposit maybe should be worth $2 billion. Tough to say. So reasons I like this project. It's a palladium project, which is extremely rare. There's very few platinum group metals projects that are going on right now. The only ones I kind of know about are Platinum Group Metals, Canadian company that has a deposit, I believe the Waterberg deposit in South Africa that they're looking to develop. And they've only got a 50% ownership of that. We've got here Generation Mining, and then Val Ore was another company that I believe they've got a platinum or palladium deposit that they're looking at in Brazil, which is about 1 million ounces. But there's just very few projects that are actually focused on platinum group metals. And that's primarily just because platinum group metals are just extremely rare in general. There's just not a lot of them. And most of it's in South Africa. So the platinum group metals producers are extremely profitable right now. I've done a lot of videos on Sibanye-Stillwater, and I've done a video on Impala Platinum. These two companies are so cheap and making so much money. Like, I think Impala was set to make about $8 or $10 billion this year, and Sibanye is just something just under that. And so it's like these companies are flush with cash, and so they're going to be looking to invest this money. And what they really want is they want to get out of South Africa. It's that currently there's a lot of issues with South Africa. I guess there's probably always been a lot of issues with South Africa, but just a lot of political issues. The economy is really not great for them, so there's lots of crime. Yeah, it's just not a kind of good situation overall. And so this seems prime for them. It's like, okay, we can develop a project outside of South Africa, so we can kind of diversify our risk. We've got all the money to develop this. We've kind of got the expertise, connections. It just makes sense to me. The payback on this project is so fast. Like, they're kind of estimating themselves that the payback at spot is like 1.6 years or something, or yeah, 1.6 years. Just based on kind of my numbers, it's like it might even be less than that, and we're not even including the rhodium. This is a lot less complex project to build than an underground mine. I'm not very versed in the building of mines, but I know with the South African mines that they have to go very deep to mine the ore. It just creates a lot of complexity, and there's a high chance of there's high risk of fatalities on a regular basis. Another thing I really like about this is most of the exploration and permitting work has already been done. So Marathon was originally doing the work themselves, and then Stillwater also did a lot of the work. So it's like this company really doesn't have to do much drilling. I can't remember exactly how much, but it was like 200,000 meters of drilling and like 2,000 holes, I believe, is something like that. That's already been done, and it's like that's great. And the management team seems to have proven that they're very fast and efficient. They've just gone through the PEA and got to the feasibility study, and they just seem to be taking action at a very rapid pace. So what's likely to happen, in my opinion? Sibanye-Stillwater has an option to buy back 31% of this project and become the lead in the joint venture. To me, this makes a lot of sense to Sibanye. Like, they have lots of cash, and they're looking for diversification from South Africa. So I don't see exactly why they wouldn't do that. The only thing that maybe comes up is that they haven't seemed to have developed any of their own mines. They seem to be more optimizers of existing mines. So they might want to let Generation build this mine out, get all the permits, and make sure it happens. But it's like either way, it seems Generation still seems like a great deal. Like, if I could own a 49% interest in this company that's going to be producing all this money, and you have Sibanye as a partner who's willing to back it up and get the funding and everything else you need, it's like it just seems like a win-win. And then if they keep 80% of their project, it's like same thing. It's like they can get streaming agreements, they can get funding from like the smelters, I believe they kind of call it. There's just a whole bunch of different options. They could just get like bank loans because the payback period is so short. So, and to me, it's like, and if Sibanye doesn't take it back over, it's like I can't see why Impala wouldn't try to take it over as well, because they've already got their mine that's really close to there, and it's like they've got just as much cash as Sibanye, if not more. So yeah, obvious takeover target. The potential cash flow from the mine is enormous. But the one thing to watch out for is that these things take longer than we expect. That they're currently applying for a permit from the Ontario government and federal government, and they say that I believe it's like 270 days, business days, that the government has to respond to it. They don't expect any problems, but I don't really have a lot of trust in politicians and all that kind of stuff. So there's always a chance that this project can take longer than expected. So I'm not sure. It's like their price seems quite cheap. Definitely the chance that it could fall, but I think it's kind of been really overlooked, that nobody's really seen it, and I think it's actually a name issue. Platinum Group Metals. It's like when people got bullish on platinum, it's like that was like the first stock that they can buy on like Wealthsimple or something like that. It's like Palladium's not that popular in general, but they don't have it in their name either. So it's like, I think if they want to just increase their stock up just based on something simple, it's like add platinum or palladium to the name. But yeah, I think it's got lots of value. It's definitely something to watch out for, and maybe take a little piece of it and then see if you can accumulate if the price falls down more. But yeah, thanks for watching.